Sadly, this trade war between China and America, this pissing contest, is still active in today's news. Every day it is really getting worse. Of course, that's wonderful since Hong Kong just lately halted postal services for US-bound items. And you know the White House isn't really doing anything about it. They claim China controls the ball. We are not handling them. Dealing with us is not really beneficial for them. Trump even drew a clear line stating that nations must decide between China and the United States. When will it end? Nobody really knows. Not financial advice, but I think the markets will probably see more pullbacks in the near term before we experience relief and a nice British pump. Fortunately, ARK Invest founder and CEO Cathie Woods really verified that this is planned. We are only months if not weeks away from the markets reversing and XRP skyrocketing in value, which is quite encouraging and very bullish. Although the last 2 weeks of tariff chaos have tested financial markets, we can see the light at the end of the tunnel. This is obviously significant news. The main talking points in this ARK Invest newsletter by Cathie Woods herself are the tariffs naturally, and whether they will signal the end of a 3-year rolling recession. Practically all the suffering the economy went through with COVID, too much money printing and really high inflation. We are able to observe. Although many commentators worry that Trump's tariff policy is a formula for geopolitical and economic catastrophe, we think that what at first glance appears to be the largest and most regressive tax rise in U.S. history could actually be rather the reverse. Particularly given Trump's request for Treasury Secretary Scott Bessent to spearhead negotiations with allies on the tariffs. All markets for that matter, including stock, bond, and even crypto, have experienced extreme volatility over the past week. Our working assumption was that Trump has been aiming for a strong market and a robust economic growth during the second half of this year into 2026 ahead of the midterm elections. Given that the regulatory frameworks for crypto are meant to be in place by August, Cathie Woods' forecast for a strong economy in Q3 would be nearly very realistic. Given these rules, and clearly in my opinion but also in general from what I can see, I believe they are the market catalyst for institutions to start sizing in their trillions of dollars of capital into this crypto space. And as we can see in Smoke's post, yes, institutional portfolios are already holding XRP. Though Bitcoin still mostly drives the market, the altcoin sector is clearly a developing niche in institutional portfolios, and obviously XRP is the one in most demand. And keep in mind, ARK Invest Cathie Woods' institutional portfolio 21 shares, they also desire XRP. After all, 21 shares have applied for an XRP ETF. This article from theblock.co shows that XRP ETFs have twice as many filings as the next nearest crypto asset, Solana. When the price values following the ETF filings in the bullish market sentiment, XRP's demand is much greater and its price will reflect this kind of conviction. Sources say this XRP ETF filing could actually be weeks away, but we'll cover that later in the video to stay around for it. I still think more corrective behavior is still possible in reaction to the tariffs and uncertainty in the immediate near term, but Cathie was thought that the worst is now behind us. As one cohort of the economy after another succumbed to the interest rate shock beginning in 2022, the last 3 years have seen now both are surrendering and giving way, consumers and the government-supported GDP. The government will have more degrees of freedom to stimulate than more investors are expecting as it enters its first recession in 30 years, which is really reassuring. The decline in activity is probably more severe now that much of the economy has sized up and even frozen in reaction to tariff concerns, otherwise would have been the situation. This is a clear demand for lower interest rates, deregulation and tax cuts, so a thriving crypto and XRP bull cycle is nearly upon us. This is quite encouraging news, and for further details on what I personally doing in this specific bull, you can follow me here in the VRP group at wap.com/coin-factory, keeping all of you informed on what my moves and targets are, realistic market expectations throughout the institutional research documents while also actively trading in the market. Have a 7-day free trial period. Again, if you are interested, rot.com/corner of the factory, can find the link down below in the description. Once again, XRP is prominent on the chart, front-running inflows as many other significant crypto assets are experiencing the contrary impact and notable selling pressure. Ripple's massive developments and announcements contribute to this, as well as the forthcoming XRP ETF mania, which will surely push the price to leaps and bounds so far higher. The fight for the top spot is now formally on, in fact. Who will be the first to start XRP ETF and gain an early move advantage? Who knows, but here we can observe ProShares Trust massive news as XRP ETF's public offering on April 30th, only 2 weeks away. Moreover, the timetable indicates that the good probability we could see and start seeing XRP ETF being made public and going live this month again in April. And once again we can see down here 21 shares go to XRP Trust Cathie Woods Company, 21 shares part of these institutions racing to launch XRP ETFs. Ripple just revealed that their stablecoin RLUSD is now integrated into Ripple payments, therefore allowing real-time cross-border payments supported by institutional-grade compliance, transparency and trust. This is why XRP is losing the opportunity once again, and the other reason. This is significant. RLUSD thus has links to more than 90 other financial institutions and banks. By this stage, Ripple Payments is essentially worldwide. This strengthens Ripple, RUSD and XRP for institutional adoption. Sergey Nazarovsky's interview on stablecoins clarifies that here stablecoins have turned into a strategic asset for governments to demonstrate that great liquidity is arriving to crypto to backstop the US dollar. Pay close attention. The government only found it interesting, society at large only found it interesting once enough of the underlying asset, the US Treasury, was in the stablecoin format. Once stablecoins exceeded 0.5% or 1% of total US Treasuries, everyone began to run around and worry about them and question what this format or what this holder of US Treasuries was. First off, every other asset class and every other asset type will experience that. Then depending on the asset class, everyone in that asset class will be like, well, what is this thing now consuming all of these underlying assets, converting them into this tokenized form? So that's something you're going to see generally, and you're going to see more bills, more legislation and more rulemaking from the regulators about those different asset types. But for stable coins it's now reached a high enough level where it's become a key concern. That means they have to create legislative clarifications on how it should be used correctly, since it's essentially large enough, thus enabling regulatory clarity. Because the US wants as many stable coins as possible to be backed by the US dollar and US treasuries, from here as it grows it will only be even more crucial that you have regulatory clarity about how to use it. Therefore, as the US government, if you really speed up the issuance of stable coins, you are hastening distribution of the US dollar, which is increasing and supporting US dollar supremacy, US dollar reserve currency status, which is essentially their main objective here, which from their perspective is a very logical, very correct goal. The stable coin dynamic has therefore shifted from a small business item that nobody understands to one significant enough to affect US dollar reserve currency status, US dollar supremacy, and US dollar distribution, thus driving our desire for more, which is a very strong good thing. I believe stable coins will become more and more common as a form of payment once there is unambiguous direction on how they can be created and how they can be used. And as stable coins become increasingly valuable to purchase digital assets such tokenized funds, tokenized equities, tokenized commodities, tokenized real estate, tokenized whatever, that is very positive for the industry as a whole, since the stable coin, though we are still early, Cathie was verified that as well. I think it as well. The apparent time is fast running out. The regulatory frameworks will signal an incredible amount of institutional liquidity pouring into the sector and capital inflows, as Anthony Pompolino verifies here on CNBC that the United States is going to purchase as much Bitcoin as